easily go to 2% in a heartbeat. Well, that's a huge move. Yeah, when you go from 1.3 to 2, that's not a doubling, but that's, it's huge. And or it's like buying a stock at 130 and it goes to 200 quickly, okay? But I don't think you'll stop at 2% because in bull trends, the silver spread always goes to at least 3. Meaning we could be at a position now where if this spread breaks out, not only is silver going up more than gold, but it's going to double in value to gold over a handful of months. So not only an outperformer, but a vast outperformer. And it also will convert into a vertical net price gain in the monetary metals, where what you've seen recently in gold and silver is nothing compared to what you're about to see when this spread breaks out. And I think we're on the cusp of it right now. We just had 5 months of that. April, May, June, July, August. There were repeated sellers. 3,500 had been the high. Mostly you get up in the mid-34s, they'd sell it. It'd go down. Wouldn't go anywhere. Come right back up. Go down. Go up. It was a sideways range of frustrated sellers who thought, oh, no, we got to go back to 2,800 or some prior high. And now, of course, they think, well, we're near 4,000. We got to go back to 3,500 and test the top of that range. The game hasn't worked. Something's going on here, guys. Can't you figure that out? You don't make a top in gold by going sideways for 5 months. When gold tops, it tops, okay? Anyway, this is the big story in my view. In fact, in my career, I think this is one of the biggest stories that's about to happen. And I've been in these markets since I got hired by Hutton as a futures broker in 75 after gold got legalized. So 50 years. This is a monster that's about to unleash. This is it's 50 years of silver price, okay? It's plotted on a ratio scale. So in other words, a move from 10 to 100 is the same as going from 100 to 1,000 in terms of multiple gain. And this is silver. And you can see the surge back in 1980. When you go to YouTube and see it visually, you'll see we've got an arrow that spans the last couple of quarters of that multi-year move. Remember, it started in the summer of 76 and went up to 1980. But in the last 2 quarters of that bull market, silver went from $8 to 50.
To understand our present, we look back on 2 powerful silver bull markets. In the late 1970s, silver rocketed from about $8 to over $50 in a compressed, explosive surge. Then again, around 2010 to 2011, after years of accumulation, silver vaulted from $17 to $20 into its 2011 highs in just months. Notably, most of the gains in both cycles came in the final quarters of the rally. That pattern acceleration near the end suggests that when conditions align, silver doesn't climb gradually, it blasts upward.
Compressed in the last handful of months, okay, and peaked, okay? So we've marked the dimension of that move in the last couple quarters of that bull trend with this red arrow showing the size of it on a log scale. Then we go back to the next bull market, which was in 2010 and 11 when silver went from, it had been going up for a couple of years, quite a few years since the early 2000s, just like gold. And then so it was an aged bull market. But then all of a sudden in 2010, something happened, and I'll explain what that is later. And the price of silver went vertical for the next couple of quarters from like, the 17, 18 bucks to 50. All compressed in the final handful of months of what had been a decade-long bull trend. Most of the move occurring in the last couple quarters. What caused that? Okay. And then I show the current bull market, which again started, back in 2015. Silver wallowed around while gold advanced and went sideways, $15 to $30 and so forth. We went up into 2021, got up to 30. Then we went into a range again for 3 or 4 years where silver just was stuck with a cap at about 30, making higher lows then in the pullback. It got down into the 20s again, I think. And then in 2024, we emerged above that 30 level and started to advance, but still not an explosion, just a persistent process. I think we're at the cusp now of that accelerated phase, where in the final 6 months of the move, silver prices itself into a different reality. The reality of the last 50 years has been capped by $50.
The present cycle began around 2015, with silver meandering between $15 and $30 as gold made stronger advances. In 2021, it reached the $30 mark, then entered a consolidation phase. In 2024, silver broke above $30 and began a steadier climb, but still lacked the rapid breakout. Now, as of late 2025, it's entering what many view as the acceleration zone. With prices nearing high marks of the past and structural demand tightening, the stage is set for a swift final leg upward.
And those were even isolated peaks, and it's not like you lived up there for very long. It was really days or, a couple weeks. Most of silver's action's been in the $20, $30 range for 50 years, okay? So in real dollar terms, if you measured silver against the degradation of the money unit, it has been going down, in real dollar spendable terms per ounce. And I think we're about to launch not only through those dual highs at $50 that everybody knows. That's not technically significant to us. That's a price level that is a relic, really, because you're talking 1980 at $50. Heck, in real dollar terms, silver probably has to be over $200 right now just to match the 1980 high in spendable real terms, okay? And even the 2011 high at $50, we probably have to be well over 100. But anyway, I think we're about to launch that handful of months acceleration that drops jaws and is, frankly, to be expected. Where silver says, I've had enough, you've made an error, I've been depressed for too long on a relative basis to gold and a relative basis to a lot of things. I'm going to catch up, and I'm going to do it so fast, if you're not there, you're going to miss it. Yeah, you'll make a high, but I suspect that high is going to be so much higher than we are now that if you're fearful of the correction that comes after that high, you're going to miss the move. Now, there's a key trigger level that we're looking at that will signal the onset of this handful of month acceleration. Yeah, we can get to that next.
A key lens lies in the silver to gold spread, often expressed as silver's price as a percentage of gold. Historically, that ratio has climbed during late-stage bull markets, 3 to 6% in 1980, 3 to 3.5% in 2010 to 11. Today, silver sits near 1.2% of gold. That's a sharp rise from recent lows, but still below prior bull extremes. Momentum indicators on that spread are carving upward. When this spread breaks decisively, it often signals that silver will dramatically outperform gold, not just follow along.
The top chart we show, again, go to YouTube to see it, is back, if you recall, back in 2020, there was a surge in gold and silver, a dramatic surge that lasted about a handful of months. From March through, for silver, from March through late in the year, in fact, silver went from $15 to $30, okay? During that time, silver handily beat gold's upside on a percentage basis. And the silver to gold spread, now let me explain how we measure the spread. Most people do the ratio chart, 70, 80, that kind of thing. We measure an ounce of silver divided into an ounce of price of gold, express it as a percent. And if you go back 50 years and look at what was the highest level that spread was in the last 50 years, you'll see that in the bull trends, 79, 80, 2010, 2011, silver got up to 3.5%, and even higher in 1980, got up to 6% of the price of gold. But during 21 of the past 50 years, even in non-bull market years, silver's at least been 2% of the price of gold. But right now, silver's at 1.2% of the price of gold, and that's been a sharp advance over the last 5 months, by the way. It was under 1%. So silver's value to gold, while it's been going up with gold in price, has been degrading, especially since that 2020 surge where silver beat gold. Silver then got up to 1.5 something percent, the price of gold, still fairly low, but retreated all the way back down under 1% again at that recent low in April.
Fundamentals are lining up. In 2025, global silver markets remain in structural deficit, driven by industrial demand, especially in green technologies, and constrained mining output. At the same time, gold has recently surged past $3,900 per ounce, drawing renewed interest in precious metals. Analysts such as HSBC have lifted silver price forecasts, citing geopolitical uncertainty and safe haven flows. Together, sentiment, scarcity, and comparative value all point to a potential silver breakout.
Since April, it's surged from 0.9 something percent to 1.2%. And when you look at the spread chart, you're already starting to break out above a downtrend on that spread, but there's a ceiling where if you go back to 2022 and 2024, that spread reached a certain level around 1.31%. They'll get worried about the details there, but
The red line.
Yeah, there's a red line on the spread, but there's a horizontal line, meaning if you go back there a third time, you're at a, quote, triple top. Don't count it stopping, okay. But we also run momentum of the spread, just like we run momentum of price. And when you run a momentum chart of that spread, you see a slightly different picture. One, you're challenging right now that ceiling on momentum. The spread, again, is at 1.2, and it needs to get to 1.31 to be there. Okay, so it's not quite there. But the momentum of the spread is, as of last month, and today it may, with today's action, might even be nudging above that. Momentum of the spread is breaking out. Now, that indicates to us that silver's about to shift into a strong outperform relationship to gold. So as gold continues up, silver will go up more on a percent basis, be the better place to be, just like it was in 79 to 80 or 2010 to 11. In the tail end part of those bull markets, silver went berserk relative to gold.
If silver is ready to break the dam, the next few weeks may be critical. The spread must push beyond its ceiling, perhaps toward 1.3% or more, while momentum confirms the breakout. When that happens, we may see silver surge not just against gold, but in absolute terms. Some forecasts even suggest a move toward $100 per ounce is within the realm of possibility. But as history warns, volatility may follow such a climax. Still, for anyone not positioned, missing this move may be the greatest risk of all.
And at no time in history, when this spread turns favoring silver, does it mean downside in price of gold more than silver. It always means upside of price of silver more than gold. So it's always not just favoring silver, but it's also saying the price of both metals is going to go up, except silver is going to beat it. We're on the cusp of that. Now, why is that important? It is the exact same spread situation occurred prior to those 5 to 6 months surge late in 79 to 80 and October 2010 to April 2011 on silver, where silver's price went off the page upside relative to gold, but it was pre-signaled by this spread breaking out. We're exactly there now on this spread. It's telling us that not only are both metals continuing up, but we're at the point now where silver could go vertical. And then the issue becomes, well, what's vertical? Take out 50, yeah, a lot of people are going to be impressed. That's really a minor indicator to us. We're right now just below 48 as we speak today. Okay. The spread says that when you break that spread out, and again, let's assume this month does it. We're intra-month, we're doing it right now. And you break the spread out, not just the momentum of the spread, but the spread gets up to the 1.3 something percent. You could easily go to 2% in a heartbeat. Well, that's a huge move. Yeah, when you go from 1.3 to 2, that's not a doubling, but that's, it's huge. And it's like buying a stock at 130 and it goes to 200 quickly, okay? But right. I don't think you'll stop at 2% because in bull trends, the silver spread always goes to at least 3. Meaning we could be at a position now where if this spread breaks out, not only is silver going up more than gold, but it's going to double in value to gold over a handful of months. So not only an outperformer, but a vast outperformer. And it also will convert into a vertical net price gain in the monetary metals, where what you've seen recently in gold and silver is nothing compared to what you're about to see when this spread breaks out. And I think we're on the cusp of it right now.